Here. Good evening, guys, and welcome back to your second personal training session with me. I think Monday or Sunday was I would say it was a pretty good session. So before we get started, I want to know if you guys can type in the chat or if you do want to speak or say something about how you felt about Sunday's session. If you got any results, what results did you get? How you're feeling about it? Yeah. So I just want to start there and check in with everybody, see how your week's been since Sunday. So type it in the chat or unmute yourself. I'll just give you a few seconds to do that. I know for the most part, I know Raquel had got results. Actually, everybody here um had got results in a trade. So I just want to make sure that the information that I am giving y'all is relevant, you know? Like I don't want to sit here and tell you guys something that you already know or something that you don't need to work on. So if there's anything that you guys want to cover again from Sunday, again, just let me know. Or if you guys want to focus on HFX for today, also let me know. So we can either do Forex or HFX, but um I need you guys to let me know which direction you want to go today. So Kayla, yes, you got results. I'm so happy. I know you sent me screenshots. Raquel said it was good to feel passionate about trading, making it simple. That's the purpose. My purpose is to help as many people as possible become independent and profitable traders. So that's what we're going to do. I'm happy that you guys, sometimes I know trading, it really is a journey. You can feel really good about the possibility of making money that way. But then if you're consistently taking losses or if you're just not trading consistently, and whenever you do decide to jump back in the market, it can be a little bit intimidating. So I really just want to take away that fear and make it simple because it's not as hard as we've made it to be. Even me myself, I've complicated trading for myself. And it really just was not really the actual skill of trading, but working on those psychological skills like having the discipline, not being too hyped to make money over leveraging, not giving up just because I take a loss and really starting to, like we mentioned on Sunday, really just think like a dynamic trader versus thinking like a typical trader because it's really easy to fall into that pattern. Again, we know it's as easy as click a button, make some money, but we really need to strengthen our mindset because if you go into the market anxious, you're going to mess up, right? Because you could be seeing something clear as day, but then you psych yourself out because you're putting all your energy into this trade needs to be correct. I need to get this right. I need to do this. So if we can again trade with more confidence, we'll become better traders overall. So again, I'm just gonna ask one more time if you guys want to do HFX. All right, Spicy said HFX. One of my trades from Sunday hit TP, but then I went back to Bitcoin. Spicy said HFX, Kayla said HFX. All right, so we're going to be focusing on HFX today. So I don't know if you guys have a notebook, if you're taking notes, but I do want you to put this in a separate section just so that you don't get confused. And when you can see my screen, I'm going to go ahead and share my screen. Um, just drop some sevens in the chat. If I do start to break up at any point, of course, you guys know to drop some fours. And then when I'm clear again, you can drop some eights. So I'm going to share my screen in sevens when y'all can see it. Also, at the end of this session, we are going to do just a quick trade review of the trade we took on Sunday to just go over why we were correct and why we all made money in that trade, whether you took the buy limit order, the sell limit order, or both. So I'm going to go ahead and turn off my camera for this portion. And without further ado, we are going to get into today's session, which is going to be based on binary options, formerly known as all of us were in IM Academy, so we know it as HFX. If you are still within IM Academy or have been in recent times, it is called TBX, but to the rest of the world, it's just called options, but particularly binary options. And we call HFX binary options because you only have two options that you can do in this market. You can either buy or you can sell. right? Just like when you're trading traditional Forex, you have the option to make money buying currencies, or you have the option to make money selling currencies. But this style of trading is a little bit more fast paced, which we all know. There are a lot of different brokers or a lot of different platforms, I should say, that you could trade high frequency or binary options on. But for tonight's lesson, I'm going to be using pocket option. I do encourage you guys to do your research to figure out which is going to be the best broker slash platform or both for you. I've been using pocket options since I started trading HFX, which was in July of 2020, and I've just really stuck it out. And if you've logged into pocket option in recent times, I would say honestly, within the last 6 months or so, you will notice that there have been a lot of changes and updates. And this is only going to add to our experience as traders. So we are going to go over just a little bit of the platform today and how you can utilize these features. And I'm also going to show you guys a simple strategy that even if you wanted to practice or if you wanted to get into trades today, while you're practicing in your demo account, you should feel comfortable enough after today's lesson to be able to do that. So before I get started, I had a question, but I forgot. So I'm gonna just get started. So again, with pocket option, if you don't have an account, just create an account. It's completely free to register. And I'm gonna start from the right of the screen. So we're gonna be starting from over here, and I'm gonna work my way to the left, and we're gonna go over these features briefly because it's really, really, really not that hard. Pocket option is a really, really user-friendly platform. Once you know what you're doing, you know what you're looking for, you don't have to use every single thing that's on your screen, but it's helpful to use it because it will help you find trade ideas, especially if you haven't found yourself being a confident trader when it comes to this style of trading, or if you want to increase your confidence, which in chance will increase your win rate when it comes to doing this. So first and foremost, you have all of these different buttons over here that you can select. And whenever you click on one, you'll notice that it's highlighted and that it turns gray. So whatever information is there, that is the information that is going to be displayed. So for example, I like to keep my trade screen open, and we can see that the trade screen is highlighted. I like to keep the screen open because I can actually see my trades in action when they're actually happening. So again, with HFX, it's going to take me a while to transition out of saying HFX, but with binary options, you can either buy or sell. So let's just say we got into the sell, right? I can actually see don't get into a sell, guys. Don't take any of these trades. It's just for an example purposes. So if I got in for a sell, if I have my trade screen open, I can see all of the details about the trade. I can see the currency pair that I'm trading. I can see the payout percentage that I would get, because you do get a percentage of whatever you risk back plus your initial investment. You'll also have now the option to double up. Now, previously, when I was trading HFX in the past, pocket option did not have this option, but it is something that can help you if you realize that the trade is really going in your favor, things are looking really good. You have the option to double up down, I believe, into the last 5 seconds of the trade. And what this means is that you can double the investment that you put into that trade. There we go. If I click double up, you'll see that I was entered into the trade for a second time with the same exact risk. So I'm going to do it again just so we have a little bit more time. So again, you can either buy or sell. I'm not doing any analysis. If I click this trade and I thought the trade was going to sell, and then if my initial investment was $1,000 into that trade, if I click the double up button, the double up button is actually going to automatically enter me into the trade again. So you're essentially copying your own trades, and it's going to double your risk, but it'll also double your reward. Now, the reason why I do like this double up feature is because, again, let's just say if the trade was going in our direction and you only had 5 seconds left, but you were deep in those profits up into those last 5 seconds, you will be able to still double up and take advantage of making those profits twice, even without being in that trade for a full time. So if that makes sense, guys, you understand how to access your trade screen, the information that the trade screen is going to give you as far as your currency, how much you risk, your time, and where you are in the market. Just drop some sevens in the chat. All right, perfect. Now you can either open this or you can close this. It's completely optional, but that's the main thing that I like to look at. Now, the more things that you click on the side, the more screens that you'll see will start to come over here. So we can keep our trade screen open. And let's just say we wanted to use another feature that Pocket Option has called Signals. Now, Signals just allows you to copy the trade ideas of other traders, right? So it'll let you know once you click the signal screen, it'll pop up at the bottom and it'll tell you how many times that trade was copied. It'll tell you which direction it was in, and it will tell you how long that trade you're going to be in that trade. So as we can see, this Euro USD trade for a buy has been copied 21 times. This one has been copied 59 times. So if you want to be with the crowd, you can copy the signal, right? You can copy the signal of the trade that has the most copies, or you can just go with the one that's at the top. So this trade does have about 12 more seconds left. Again, it's not always nice to copy trades from other people. They don't always go in your favor. However, sometimes they do, but that's just going to be something for you to determine if you want to do that or not. Again, let's just see. Now it changed. We have Euro USD. This is the risk. It's been copied 18 times. It's the highest one. Now you can copy that, and they're in this trade for 10 minutes. So they probably rolled over and rolled over and rolled over. Now, again, this is not something that I would recommend. However, if you want to use that feature, it is there for you to use. The trades don't have to be 10 minutes. Obviously, you can see that this person used rollover. You have some other options here. This trade was copied 160 times, and there's 20 seconds left in that trade. So if I was to copy that signal and it's 20 seconds left in that trade, we can just sit here and see where the trade is going to go in those 12 seconds, right? Again, these people aren't always right. If you've had a chance to listen to Mark Douglas, the Disciplined Trader, or Trading in the Zone, you understand that the foreign exchange market and trading and how you take your entries is all going to be based on somebody else's perception of what is high and what is low, right? So they have it, but again, it's not something that I would necessarily recommend just because people can be wrong. And at least if you're taking your own trades, you want to know why. Now, social trading is, oh, you can't do it for a demo account, but social trading is pretty similar. As other people take trades in the market, you'll see these little bubbles pop up letting you know that this many people enter here for a sell or this many people enter here for a buy. So if you're feeling a little bit unsure, of course, you can go with the crowd and see what they're doing because every trade you take either way is going to be 50-50. Now, express trades are also similar. You are not really you're not really, again, doing any analysis. You're just copying somebody else's trade. So if I wanted to go buy for American Express, sell for Boeing, and sell for Facebook, all my trades will be in. They will tell me what my profit is. And then once these trades, it'll tell you time until purchase, 1 minute. Time until purchase, 1 minute. Again, these are similar to signals, but instead of for currencies, they're for stocks and other assets that you can trade on Pocket Options. So again, this can be helpful. Let's just say you don't have a lot of time to trade, but you still want to make some money. You can come in here and take some of these express trades. And just based on my experience in the past, express trades do tend to have a little bit more validity than copying the trades because it's all based on who you're copying from. But again, the reason why we're here is to learn how to do our own trades. So we're just going to let that play out and we're going to see what happens once those trades are activated. Now, I'm only going to go over this briefly, but Pocket Option is more than just a trading platform. It is a social site for traders. So there's a lot of opportunities to actually chat with other people who are trading. They have a lot of types of achievements and things that you can utilize. And I'll just go here, for example, to show you, because it can actually be fun. Like trading actually can be really fun and they make it fun. So these are just some examples of some of the things that you can do. The ones that are highlighted are the ones that I've done. The ones that are blocked out are the ones that I haven't done. But of course, this is a demo account, so a lot of them won't be valid. So for example, you click this one. This one says made at least 5 deposits, right? That's something small. This one says made your first deposit of more than $100, right? And the more you do these things, you'll see over here, you'll gain experience points. You'll get these rubies, red rubies, green gems, blue gems, and purple gems. And these gems are really cool because they can be exchanged in the market for a lot of different things. One of my favorite things to use my experience points for on my live account is they have a cash back option, right? And the cashback option just means that, let's just say if I lost $500 this month, right? They're going to give me at least 10% of my losses back. And that's something that you can purchase with your experience points. And the reason why I really like that is because even if I am taking losses in the market, I'm not going to be as upset, simply because I know I have the option to just go to the market, buy a cashback, and get my money back. Another cool thing that you can buy, there's tons of things that you can buy with the market is actually here, so I'll just click it. But there's tons of different things that you can buy in the market. And another thing that I really like to buy with my gems and rubies, I actually forgot what it's called, but if you've ever been into an HFX trade and your trade has closed either 1 point above or 1 point below your entry, that can be frustrating. So they do have something in the market that you can use to still make a profit or get your money back if the trade is within 1 point of your entry, right? So if that makes sense, guys, just drop some threes in the chat. Or if you have any questions about any of these features so far, just drop a question mark. So 7s if it makes sense, question mark if you just want me to go over something else from the right panel. I forgot 3. Okay, 3. That's fine. Okay, cool. So as we can see, this trade that we took, that was a copy trade. There is still about 4 minutes left in the trade, but it is in profit. So again, copying trading isn't always bad, but it will be something quick that you would do because it's 50-50. But again, that's not something that I would just say put all your time and energy into this. So cool. We're gonna move on. But pocket option really can actually be really fun. Like on my live account, I actually sat down one day and I just went through all the achievements that I've done, and I just was like, wow. Like one of them was like do 50 trades in a day and clear 50% or something like that. And I'm like, wow, I really used to be trading. Like I've hit so many things, like did 1,000 trades, did 10,000 trades. Like it's just crazy. And the more you trade, the more experience points you'll have and the more that you can do with that. So the next thing on the right panel that we're going to go over is pending trades. And I really like the pending trades option because this is kind of going to be a crossover from what we already know with Forex and also what we learned on Sunday when it comes to support, resistance, liquidity, and finding your entry points. So similar to how we set a buy limit and buy stop order on Sunday, you can also do the same thing on pocket option. You can set your pending orders and you can just let them go. Now you have 2 ways to do this. You can do it by the time. For example, it'll be like at 7:30, I want to enter this trade. So you would just change the time here, right? And it's in military time. So you would have to figure that out. Or a simpler way to do it, which is based on what you would look at on the chart, will be to trade by the price of the currency, right? So before you actually use this, you're going to need to know what your support areas are, what your resistance areas are, and so on and so forth. So I'm just going to put some on my chart really quickly just to show you how you would use this pending trades feature. So over here on the left panel, of course, you have the option to choose your currency, choose how you want to look at your chart, whether it's a chart or it's a line graph. You can choose your indicators and you can use simple drawings like a horizontal line, which is all we need right now. So remember, we're going to put our horizontal line at where we see those wicks are. So of course, I'm going to change the color of this because that green is a little And then I'm going to make the line a little bit thicker just so I can see it, right? So let's just say I see some wicks or I see some liquidity right here. And the price that I see, and with HFX, guys, we used only the last 3 digits. So let's just say 106,989 was the last place that I saw some liquidity. I would want to set that place as a place for a sell. So I will put 106,989. Your payout, you could say as long as the payout is, when it says from, that means that that's the minimum that the payout has to be in order for the trade to trigger. So typically I would change it to 70% just because I don't really like to trade currencies that are lower than 70%. But because it's 60, it's the same thing. Anything above 60%, it would trigger my trade. So we'll leave it. You can choose the time frame, which is how long you want to be in this trade, which would be 1 minute, 3 minutes, 5 minutes, and even up to 4 hours. But the point of this is to get your results a little bit quicker. Not saying that you can't, but that's the point. So we're gonna put it on 1 minute, and we're gonna risk whatever you want to risk. Let's just say $100, and we're gonna click the lower button. Once you do that, your trade is gonna pop up in the current tab, and it'll tell you this is a pending trade. Once the market, which is currently at 912, once the market gets to 106,989, it should automatically put me into the trade for that sell. Right now, I'm not going to click anything or do anything else. We're just going to move on. And if the trade triggers, it does. If it doesn't, it doesn't. But the reason why this feature is so cool is because you can sit here and let's just say you wanted to look at your chart for the last 4 hours, right? You can set a couple of pending orders here, right? Because you know that if you're looking at your chart on a higher time frame, which is obviously longer than 1 minute, obviously longer than 5 minutes, you know that this is a strong area of resistance because it's all of those candles that we saw for the last 4 hours. And you know that if once the market hits this point, it's bound to drop, even if it's just 1 point. Because remember, when you're trading HFX, you only need 1 point above or 1 point below to be in profit. Now, let's just say instead of taking one trade right here, right, at this area, let's just say we took 5 trades at this area. And in those 5 trades, we risked $100. And in the $100, it was a payout of $80, right? So if we were to clear all 5 of those trades, that would be, what's 8 times 5 is what, 40? You will be making a profit of $400 even if you're not at your computer. Just simply because you noticed where that resistance was, you noticed where that support was, you put the appropriate horizontal lines on your chart, you recognize that there was some liquidity in that area, and then you decided to take the trade. So pending orders can really come in handy because I always say you have to first determine what type of trader you are, right? Are you the type of trader who wants to sit at your computer for an hour or two to see your money and see your profit in real time and be done for the day? Or are you the type of person that likes to set it and forget it? So everybody could just drop in the chat what type of trader you are. Like, are you a I need my money and I need it now type of person? Or are you the I can set my trades and wait for them to either hit my take profit and hit my stop loss? Because it's really different for everybody, because you can see instant profits with traditional forex trading as well. If you happen to get into a buy during a high volume session, and that's why volume is so important, because if there are a lot of traders in the market, that means it's a lot of volume. That means that the market is moving really fast and it's easier to essentially see those results. So we still have our pending trade right there. We just going to let that go. But those are for Forex, set and forget it. For HFX right now, yep, both are valid. Whatever you feel more comfortable with is the best way. But pending orders help for those people that don't mind setting and forget it. And market execution, which is you just click the button, helps for times when you just want to see your profit now. And I completely understand that. I've been both of those people. I am both of those people. So cool. Those features are super helpful. Now, the next thing we're going to go over, it's going to be pretty simple. This is high frequency trading. So that means that, oh, they put it back. So that means that you can choose how long you want to be into a trade. Now, another update that Pocket Option did, which I think is berserk, right, is they added a 5-second option. And what does this mean? This means you can literally only be in your trade for 5 minutes. So let's just say we decided that we were going to get in for a buy, right? We can either make or lose $1,000 in 5 seconds. And that's just actually ridiculous, guys. We just lost the trade, $1,000 in 5 seconds for what? For what? Right? For what? It makes no sense. Again, you can also get into a trade for 15 seconds. right? So you can either make or lose $1,000 in 15 seconds. Now, it sounds ridiculous, but once you put your indicators on your chart, you do build your confidence. I would personally stay away from these trades unless, right? Unless everything is just going in your favor, right? And again, as you can see, we lost that trade because why would you want to be in a trade for 15 seconds? Like, it makes no sense. We don't have any indicators on here. We don't have any of that. I'm just showing you guys the time options and how quick how quick you can pretty much make or lose the money. So I typically like to trade on M1, but you do have the option to stay in a trade for a minute. Like, let's just say we got into a sell for a minute, and then let's just say we got into a sell for 3 minutes, and let's just say we got into a sell for 5 minutes. All of these things are options for you. It's just how confident do you feel in what you're doing in the market at that time, right? So now this trade is in profit for now, but these are all samples until we add our indicators and see where it goes. But if all goes well, right? If all does go well, right? You could see yourself, and again, you don't have to risk $1,000. That's just something I was doing earlier. So yeah, we can see this trade is about to close in about 20 seconds because we have our trade screen open. We can see all the details of the trade. We can see we got into this market at 861, and we can see the market is currently at 850. Well, now it's back at 861. But as long as the market remains under our entry point, we would have made, what's this, $890 in it looks like it cleared $890 in 1 minute, which is amazing. Right now, I just changed my trade amount to a realistic number because I don't want you guys over leveraging. When it comes to how much money you should put in a trade, is going to be based on your account size, right? So another cool feature that Pocket Option actually added is they added the option to either set your trade amount by percent or to set your trade amount by dollar. So currently we've just been trading with the dollar amount, but let's just say I knew that I didn't want to risk more than 10% of my account for the day, right? Or I knew that I didn't want to get into more than 5 trades. And within those 5 trades, I didn't want to risk more than 5% of my account a day. I can click on this dollar sign and I can change this to, well, yeah, based on your account size, it'll let you know, but the highest that you can risk on Pocket Option in general is $1,000. So 2.2% is that. So let's just say if I do 1%, right? 1% of my account would be $440.74, right? So let's just say I got in for a sell, and you can see as soon as I got into that trade, my percentage, the next 1% that I could risk if that trade does not go in my favor, is $436. And if I get in for another trade, my 1% is going to continuously change automatically based on my new account balance, right? So if that makes sense, guys, just drop some 7s in the chat. Just drop some 7s in the chat. And again, you do have the option to double up or roll over, right? Rollover is another feature that Pocket Option added, and everybody really used to be coming at Pocket Option because they didn't have rollover. But guess what? They got it now. And rollover just means buying yourself more time in the trade. So this trade, I believe we were in for 5 minutes, right? This was a 5-minute trade. Now, if I click rollover, the first thing it's going to do is ask you if you want to confirm, right? The information is going to pop up. It's going to say you risk $440, but with this rollover, you will be risking $881. And instead of closing at your initial 5 minutes, we're going to add an additional 5 minutes to your trade to give you some more time to clear. So you're buying more time, you're doubling your risk, but you're also increasing your chances to make money. Now, I'm happy that they ask you if you want to confirm, because sometimes we do end up clicking buttons by accident. We know our fingers be slipping. We know how people get, and we click confirm. So once I've confirmed that rollover, I can see that my time changed from 4 minutes to 8 minutes because now I just gave myself more time to be in this trade, right? And I really like that as well. So of course, payout is just the payout is how much you're getting paid in the initial trade. If you put $100, let me change this back. If you put $100 into a trade and the payout is 84%, you're making $84. right? So not only is the $100 going to come out of your account, right? If the trade goes in your favor, you're going to get your $100 back, and then you're also going to make 84% of profits. So for example, and again, I'm just clicking any button. We can see my current balance is $44,645. Once I get into that trade with $100, we can see my balance goes down to $44,545. And if this trade does go in my favor and I didn't have any of these positions open, I would get a profit of $184, right? So those are the main features with pocket option that you need to understand. You need to understand how to view your trades. You need to understand that you do have the option to use signals in social trading if you do need a little bit of help. You do have the option to, the more you trade, the more experience points and gems you'll get, and the more rewards you'll get back from pocket option, essentially. We talked about the time frame. You can be in the trade anywhere from 1 minute to 4 hours. We talked about risk amount, how you can do it by dollar or percentage, payout amount, and the option to buy or sell, right? So if you guys are good so far with just all of those things, because those are just basics, and you're ready to move on to strategy, just drop some sevens in the chat. Because there have been a lot of L's, but we haven't been trading with any common sense. We've just been pressing buttons, right? And I do encourage you guys, as always, if you know me, I'm going to say whenever I'm teaching, just use your demo account. It's nice to make money when you have other people calling trades, but it's also nice to not risk your real money if you don't have to. I want you guys to take this information and revisit it later. You don't have to be in your live account now, but we're all adults, so do as you please. So first and foremost, pocket option, something else that they did do was they made every single currency pair OTC, right? And we know OTC, typically we say we don't want to trade OTC, we don't want to trade OTC, we don't want to trade OTC. And that's because OTC is not on a regulated exchange. And you'll notice that the price is going to be a little bit different than the actual price. And I'm going to tell you what I mean. So for example, we can see currently that Euro USD OTC is at 1.06900. If we go to the regular Euro USD, which they also have, it's at 51%. You're going to notice that it's at 1.07307. So there is a little bit of a difference there. So I'm only saying this to say, I know some people, if you want to trade on pocket option, which is HFX and Forex at the same time, make sure that you are using the regular currency pair and not the OTC pair, because it will mess you up. It will mess you up. Like, you will think you're getting into a trade at the same time on both your high frequency account and your Forex account, but you're really not, because the numbers are just not adding up. Now, if you're only doing HFX strictly for that session, you can use OTC pairs, because pocket option updated their OTC pairs. Is not crazy. Like, if you guys remember, OTC used to be moving so ridiculous, and it was no correlation to the initial pair. So now it's a little bit closer to the numbers, and you can use the same strategies and everything, and it should work out for you fine. So I'm going to go back to Euro USD. But before I move on, do you guys understand the difference between OTC and regular pairs when trading HFX? Just drop some sevens in the chat if yes, because I don't want you to get confused. Because before it was like, don't trade OTC, because it was no relationship to the regular price. Now it's a little bit closer, right? It's a little bit closer, but it's not exact. So, all right, cool. So now we're going to get into a basic strategy that you can use to trade HFX. It's very, 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 very simple. And I feel like if you stick to these rules, it's honestly hard to mess up. Just don't get overzealous and don't expect every single trade to go in your direction. Remember, we're trading based on probabilities, not trade by trade. So we're going to stick with Euro USD OTC. I'm going to keep my candles on candles. I'm going to keep my time frame at 5 minutes. This means that I have a candle appearing every 5 minutes. And I feel like this time frame is perfect for HFX. You can do something smaller, whatever really floats your boat, but this is the way we're going to be learning today. So just like TradingView and every other trading platform, you can choose from all of these different indicators. right? And indicators will just confirm what you're already seeing on the chart. So now before I don't know why I can't make this smaller. So before I add any indicators to this chart, would you guys say that Euro USD was on an uptrend or a downtrend based on what we can see on our screen? Is it up, down, or consolidating? And you can drop UD or C, right? UD or C. Yeah. C. Okay. I will look at this market and I would say it was consolidating. It had a little break of structure right there, and this was it was just a break of structure, but now it looks like it's coming back down, and we just going to confirm if it's buying or selling. So the two indicators that we're going to use for this strategy is actually one indicator that we're just going to add twice, and it's going to be the moving average. I don't think we went over a Forex strategy on Sunday, but this isn't the same. You could do the same thing there, but we're going to focus on this for now. So you want to add two moving averages to your chart. The first moving average, you're going to want to change the period to 50. And you're going to want to choose the moving average option to EMA, right? We're going to change the style to blue. And we're going to make it 2 pixels. So all I did was change the line to blue and make it a little thicker so I can see it. And I changed it to 50 and I changed it to EMA. EMA stands for exponential. Oh, it says my computer's dying. Hold on. All right. EMA stands for exponential moving average. So it's just collecting data over a longer period of time and it's giving you actual average. SMA stands for smooth moving average. I'm not really sure what the difference is, but I've always just used EMA and I've studied a lot with the EMA and it just works for me. Now the second moving average, we're going to change this to 200. We're also going to change the moving average to EMA, right, which stands for exponential. We're going to change the style to any second color that's not on your chart. I typically use purple. And I'm also going to change the pixels to 2. And we're going to click save. Right? Now, this strategy is extremely simple. The moving averages tell you where if the market was higher than average for the last 50 candles on the 50 EMA, or if it was higher than average on the last 200 candles for the 200 EMA. So remember, the blue is the 50 and the purple is the 200. Now, if I just scroll back, what you're going to notice is exactly what I said. Whenever you see the candles are above the EMA, right, especially when it's above both EMAs, right, only look for buy opportunities. Only, right? That's going to be a strict rule you have to follow, right? A strict rule. And I'll give you one exception, but not right now. So if the candles are above the EMAs, right, you're going to only want to focus on buy opportunities. Not to say that you won't get some sales in there, right? Because you definitely will, but you're going to have more chances to buy, right? You don't need to trade a million times. Oh, say that again. If the candles are above the EMAs, that means price is above average and you're only going to want to take buys. Because remember, guys, we're only going to be in these trades anywhere from 1 minute to 5 minutes. So even if, let's just say we only focused on this entire section right here, these last 12 candles, which is about an hour, we still could have cleared 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You still could have cleared these 10 trades in this time just because we only focused on the buys and vice versa. And I'll just go back so you guys can see when the candles are below the EMAs, you're only going to want to take sales, right? It's just pretty simple. It's telling you price is below average. Price 9 times out of 10 is going to continue to drop. Not that it won't ever buy again, but why increase your chances of losing if you really don't have to, right? The second thing you need to know about the EMAs is that the further away the EMAs are, the stronger the trend is going to be, right? The further away the EMAs are, the stronger the trend is going to be. So as we can see, a sell trend is picking up, right? We can see not only has the candle crossed below the blue EMA, but now it's starting to cross under the purple. And then within the next minute or so, it's probably going to break that line before it turns around for a reversal, right? It's probably going to break that line, right? And there we go. We're heading into a stronger selling trend, right? We're heading into a stronger selling trend. Vice versa. Again, if the candles are above the EMA, you're going to want to take buys. So you'll notice that when we were in for these candles, right? All of these candles, it was above the pink EMA, right? All these trades, we took sells, right? I took it on purpose just so it was easier to see the difference when we went back. All these trades were sells. But if we would have noticed that the candle was touching the pink EMA, right, at the bottom, we would have noticed that this would have been our opportunity for a buy. Because the third thing you need to understand about the EMAs is that they actually act as support and resistance lines, right? If you're familiar with the Bollinger Band strategy, you'll know that whenever candles tend to touch a top line, right, it'll be going for a sell. And whenever candles touch that bottom line, it's going to be going for a buy, right? So I'm just going to go ahead and again scroll back in time so that you guys can see some examples of this. And I'll circle some as well. So we'll see here, right? The candle hit the resistance at the blue EMA. It came down to the purple EMA. So now the purple EMA became support. Hence is why we lost our sell trades, because the market was finding new support. Not only do we find the candles on the support line, but we also see liquidity here, right? We also see a strong red candle followed by a strong blue candle, followed by a small buying trend, right? If you guys see that and it makes sense, just drop some sevens in the chat. And again, I'm going to scroll back and give you guys some more examples before we actually get into some examples in real time, now that we have our indicators on the chart. So I'll just repeat it one more time. The EMAs will act as a support and resistance, right? So if you were looking for a buy when you're trading HFX, you're going to want to look for, is the candle near a support line, right? Is the candle near a support line? That's one question you could ask yourself. And in this case, it was, right? The second question you would want to ask yourself is, do I see any liquidity, right? And do we see liquidity, guys? Liquidity means you see at least 3 wicks, right? 3 wicks means 3 rejections. 3 rejections means price is setting up for a reversal. Yeah, Kayla, the purple EMA settings are, you want to change the length, or I forgot what it's called here. Hold up. It's not called the length. It's called the period. You want to change the period to 200 and the moving average to EMA instead of SMA. So let me know when you got it. All right, you're welcome. So again, I'm just going to scroll back just so that you guys can see some examples of this, right? And I'll circle them as well. We see what happens here. We see the candle was close to the blue EMA. No, actually, let's not start there. Let's start where the trend actually started, which is here, right? We see that the candle pushed above the blue EMA just a little bit, right? So we would have wanted to get in for a sell right here, right? Because not only did it break the resistance line, we would have said once the market gets to 569 or higher, we're going to take it for a sell, and we would have cleared, right? We see that the market continued to drop, broke past the second line, right? But then again, I told you guys earlier, the further that the EMAs are away from each other, the stronger the trend, the closer they are to each other. The closer they are to each other, the weaker the trend, right? The weaker the trend. So pretty much, let's put this into an example of real time, right? And what do we see? It's actually perfect. We see the candle is falling below the second EMA, right? We see that there's a little bit of support right here, but we also see that the candle is actually below both EMAs. So what we would do, we can take our horizontal line, we can put it above the last highest high, right? And we can say that if the market gets to 816 or higher, we can get in for a sell because it looks like this market is going to continue to push down. And I got 816 because I simply just put a horizontal line at the most recent highest high, right? So we will see what happens if the market gets to 816 or higher. You can take that for a sell, right? Just because that's the most recent highest high. Or if you want to wait, remember you don't have to get into any candle. If you wanted to wait, you can see what this candle is going to do because this could turn into another area of support. However, because the market has been selling and because there's a previous low here, right? The market will have to sell down to at least there before it actually started to continue a strong buy-in trend again. So we're going to see what happens, right? The only reason I'm not crazy about this buy is because I don't really take buys if the candles are not above the EMA, right? Now, the reason why I can get a little tricky is because it's at the bottom line. So we can see what this candle is going to do. If it turns red, it's like, okay, take it for a sell. If it turns blue, right? Remember, we have a strong red candle, a strong blue candle. We're going to see which way the market is going to go. But personally, I think it's going to sell, and I think it's going to push past this low right here. But we're going to see what happens. And again, because this pink candle is this pink line is this purple line is area resistance, you can say as 776 or higher sell, but I will wait until it gets to at least 816. So I'm gonna see what happens once it gets to 776 or higher. And you can let me know if you guys take this trade, if it does make sense, right? If it makes sense, drop an MS in the chat. If it doesn't make sense, drop a question mark. Because it's really simple. It's when candles are above the EMAs, take buys. When candles are below the EMAs, take sells. We see some liquidity being started right here. So again, 787 or higher for that sell. The candle seems to be pushing under both EMAs. So now it's a waiting game, right? We have our rules. We know how to enter the trade. We know how to calculate our risk. And now we wait. Now we wait, guys. And again, the market is probably going to come down to here, right? If you were to take a buy, which I would not recommend, it would be at this area, 106.643, because that's where the previous low was. And we know that the market likes to touch down and then bounce back up, right? So we're actually looking for sales. I wouldn't be risking getting for a buy, but if you do just are putting your support and resistance, you just want to find the most recent lowest low and buy at that area, but don't do that. I just know some people are going to do it anyway. So if we would have got into this trade at this area 774, we can already see that we will be in profit in this trade. But we're just gonna wait. We're gonna wait because there's nothing else that we can do. But again, no matter how far I scroll back, or even if I switch to a different currency pair, I know somebody said they like AUD CAD yesterday, and I know Spicy like CAD JPY. Okay, this is a good example, right? Let me get my horizontal line. Right, I'm gonna put it at an area where I see liquidity. The market is clearly already under both EMAs. So this would be the perfect opportunity to get in for a sell. And we would take that sell at 860, right? 860 or higher. We would want to get in for a sell, right? Or if you want to wait a little longer, you can wait until the market gets to 957, right? So let's see what happens. Oh, I should have set my pending order on Euro USD. So let me go back and do that. Is this making sense, guys? Just let me know if it's making sense. And again, this market is still dropping. It's still dropping. You really don't need a bunch of things on your chart. You just need to understand what is the trend. Because versus Forex, where you're looking at things over a longer period of time, HFX is you really need to know what is happening right now. Like, you need to respect this even more so than you do respect your forex trades, simply because the time is so quick and it can really make or break you so quickly. So again, we see that the market, it might actually drop down to here. I'm gonna set my pending order at 734. And I'm gonna go back to my AUD CAD trade and see what's going on there. All right, so we said once the market, okay, now we see it's finding new highs here. If the market gets to 825 or higher, we're gonna get in for a sell. And it may seem like it's not ever gonna get there, but it always gets back there. We can see this market was consolidating for a really long time, but now it's, again, if we would have gotten to 825, we would be in profit with this trade. If you guys have any questions, please let me know. And again, this is a completely different currency pair, but I'll just scroll back so that you guys can see that when the trades break above the EMAs, yes, you can take sells, but you can see that there are more blue candles here, right? When the candles drop below the EMA, you can see that you'll find more sell candles, or sell candles, longer sell candles that have more volume, right? So let's see what's happening here. Is this a trade we just put in? Okay, so we put in this trade, I believe, as, I think this was the pending trade we just put in, at 740 or higher. We have about 25 seconds left, and we're gonna see what happens. I actually want to see what's happening with that trade. Guys, was it this one? Oh yeah, guys, so we obviously got taken out of the trade. We got taken out of that trade. It wasn't a clear, but that's okay. Let's look back at AUD CAD. And again, we're gonna wait. But that trade was a little tricky because it was on the purple line, which means it could have been a support. But this is a clear selling trend. So we're gonna see what happens here. We're gonna wait until the push up. We're gonna still wait until it pushes back up to 825, and then we are gonna take that sell because this has all the signs of a sale. It's like no confusion there. And again, you don't want to rush this. You always want to wait until it actually comes back to that point. And this time we're waiting for at least 820, because 820, it has to break the last previous high. And again, I don't recommend jumping around the market, trading a bunch of different currency pairs. I just recommend waiting, or again, setting your pending orders. It will get there eventually, but I'm going to do the same thing. I'm going to set a pending trade at, I'm going to go for the last highest high. It's 828. So I'm going to go to pending trades, do asset price. I'm going to do 0.93828 for a sell. And I'm going to click the sell button. So now that trade is pending. So if and when the market gets back to that point, it should automatically trigger the trade, and then the trade should continue to sell. There's no confusion there. So if you guys have another, and again, it's still selling. It's still selling. It created a new low here. So now you can wait until 786 to get in for a trade. Remember, we're still going based off of liquidity. We're still going based off of, if it's a sell, it's going to break the previous high, right? It's going to break the previous high, and then it's going to come down, which is exactly what this candle did, signaling that the market was going to go down this way. So let's close that one. I'm gonna just go back to Euro USD to see. Okay, so now it looks like because the candle, it broke the pink line, and then we see now our candle entry signals. We see our red candle, and then we see our blue candle. We can say, okay, now the purple line has become a possible area of support. We'll say once the market gets lower than 696 or lower, it could be a potential entry for a buy, right? It could be a potential entry for a buy because now we see that instead of this being a resistance, it could potentially be a support, and that's demonstrated by this blue candle right here. So yeah, guys, HFX really is the waiting game because you're really just waiting for your candle to get to your entry point. And then once it gets to your entry point, you're going to get in for whether you perceive it to be a buy or you perceive it to be a sell. We can see that every time this candle touches this pink line, it turns around for a buy. Unless of course it's fully under, which it would then be a sell. So all we can do is wait. All we can do is wait. But I don't have anything else particularly to teach. I do just want to do some trade examples. Actually, what time is it? I should just be trading in an in session thing. It's 8 o'clock. So I should probably be trading something with JPY or something. So I know Spicy like CAD JPY. So let's just look at that for a second. Oh, I forgot to tell you guys the exception to the rule as well. Okay, so with the EMAs, the further away the lines are, the stronger the trend is, the closer the lines are, the weaker the trend is. And the only time you want to trade against the EMAs is if you find liquidity at the bottom. So for example, yes, the candles are both under this, but the EMAs are really close together, telling us that the selling trend is weakening. And we also see that there's this liquidity at the bottom. So if we add a horizontal line here, and this is the only exception, if the EMAs are close and there's liquidity. Other than that, don't take trades in the other direction of what the trend is doing. So let me do this. Right, so in this case, we'll say if the market gets to 801 or lower, get in for a buy. And if the market gets to the last highest high, if the market gets to 246 or higher, you would get in for a sell. Now the sell would be the stronger contender simply because both of the candles are under the EMA. Are under both EMAs, but the buy is an option simply because we have this down here and the candles are further away from those lines. So sell will be here at 237 or higher. Potential buy will be at 801 or lower. So again, we just wait. If you guys are taking any trades or you have taken any trades, just let me know what they are. Again, if you don't feel comfortable taking 1-minute trades because you see that you can get kicked out of the trade and the trade still goes in your favor, you can have 3-minute trades or 5-minute trades. It's completely up to you. You could sell there, you could sell here. Anywhere you see a collection of which you can sell. So again, you could sell at 247. You could sell at 400. You could sell at 500. So let's just see if the candle is going to break this high. If it goes past 234 before you take the trade, you're going to want to take it at the next high, which is 348. If it goes past 348, you're going to want to take it at the next high, which is 481. We see some resistance there. 120 or higher could be a potential entry as well, simply because we see a rejection there. But yeah, guys, that's pretty much it. That's really what I wanted to show you for today. I wanted to go over the features of Pocket Option and let you guys know what the updates were, in addition to using the gems, rubies, and marketplace. I also wanted to show you guys how to use the EMAs to spot out potential trade ideas, right? This was not meant to be a live trading session, thank God, right? And the intention was not to be a live trading session. So if you run your demo account, you should be able to see why the losses came. And if you're in your live account, I'm sorry, that was not the instructions. But again, only take buys if the candles are above the EMAs. Use your EMAs as support lines, as we can see, right? You can also use your EMAs as resistance lines as well, right? And again, here's a perfect example. The only time you want to trade against the EMAs is if the candles are far away from the EMAs and you find liquidity in that direction. So we have an example here where, yes, the candles were under the EMAs. However, they were far away and it was liquid. And then same thing up here, right? There was a little, no, that's not a good example. Same thing up here. The candles were far away from the EMAs, but it was liquid, right? So these are the areas that we would have wanted to take sells in. We would have wanted to take the sells at the highest high, and you would want to take your buys at the lowest low. So in this example, we would want to take our buys at 786. We would want to take our sells at 237. So that's all I need. Final questions? I'll just give you guys a few moments to answer. The settings for, let me go order. The settings for the blue EMA are 50. It's 50 EMA blue 2. And the purple is 200 EMA purple 2. And again, we see the candle is slowly approaching. I can't really see this number, 779. So if it does get to 779 or lower, again, potential buy opportunity. But we're gonna see what happens. Right now it's at 809. I wouldn't take it there. I would literally wait for the push down to 779. That was 797. Okay, cool. Everybody said they're good. And Kayla, yes, you're also going to get this recording. It be taking a while to process sometimes. So once the recording processes, I'm going to email it to you guys within 24 hours. I also have to send you guys the PowerPoint presentation from the first class because I actually finished putting all the links there. And let me just go to that really quickly just to show you guys how to utilize that. So it is on Canva. I'll send you guys a link. And every single thing has, sorry guys, every single thing links to something else. So if you see a line under it, that means that it's a clickable link. So if you click my name, it's going to take you to my Instagram. If you click the Cosmic Club, it'll take you to the YouTube. On every single page, you should be able to, if you click trading psychology, it's going to take you to the trading psychology section of the presentation. If you click on this page, right? This page is the Trading Without Fear page. Most of these links has a link to a video. So it's either a video I made, it's a video by Mark Douglas. The only video that I have not linked is a clear strategy yet, just because everybody has their own strategy. And I am going to be posting a liquidity video soon, so I'll tag it here. But all of these things are clickable. Again, if you see a line, there's most likely content there. Understand the market. There's also a video attached to that. I am going to put some prizes within these question marks, which I haven't done yet. So that'll be things like a free session, an account fund up. So you do want to make sure that you are utilizing the study guide. But that's all, guys. Thank you for coming tonight. I will email y'all as soon as I get it. And I will see y'all on Sunday for another Forex session. So that's all, folks. Have a good night.